Welcome back. You're watching The Money Show on ET now. It's time for our Spend with TMS segment. Knight Frank India has released their residential report for the 6 months gone by Jan to June 2021. And guess what? Indians are picking up homes from the residential realty market at a very, very fast pace. Of course, to start with, our base wasn't very good, but there have been a surge in launches. There's been a surge in the sale of those homes, and the overall inventory as well seems to have finally started dipping a little bit though. Let's talk about some of the findings with Gulam Zia, Executive Director of Knight Frank India. Thank you so much, Gulam, for joining us today on the show. What is pulling Indians towards buying a home at such a rapid rate, especially when one would think that, the pandemic has come in, it's hit incomes, it's perhaps hit affordability as well. Still, people are going ahead and, buying homes at quite a rapid rate. It's in fact prompting developers as well for more launches.
Well, there are multiple reasons to this phenomenon as you're observing. And to start with, if you talk about pandemic, obviously the picture starts turning grim. But then prior to pandemic, a lot of those setups or the whole real estate setup was changing with perhaps the lowest of interest rates that you've ever seen, and so many SOPs, especially for the affordable housing segment. And in between, we saw even various states doling out the stamp duty reductions, starting with Maharashtra, then Bangalore, now even West Bengal, Kolkata has also come up with it. So a lot of these factors. And let's not forget the pent-up demand. Prior to pandemic, almost about half a decade, if not more than that, pretty much every market in India was going through a tough phase. The sales had dried up. And suddenly, then when the markets were starting to look up, the pandemic hit. So today, when we are looking at these numbers, it is evident that people have realized that waiting for the prices to drop further may not give any further results. So rather buy, and especially all those who are waiting on the fringe, sitting on the fence to buy that house, have come back in the market. And well, let's look at it this way. It's not just India. Globally as well, we've seen huge traction in Americas, in UK and many other markets. So India at last have fallen in the same bracket as the rest of the huge big markets where residential transactions have jacked up. And that's what is reflecting in Indian reality as well. Back to you.
Gulam, this better demand that you've spoken about, is it being seen across segments, or is it just in the lower end or in the more luxury segments? If you could share a little bit about that. And also, have developers had to continue offering those attractive discounts, freebies, schemes to attract customers?
Well, to start with, your first part of the question is what segment of housing is what we're observing? Well, it's well spread. All the segments are watching huge transactions happening. And even regionally, pretty much all over, a few markets have actually performed much better than the others. Like Mumbai and Pune, obviously because of a huge stamp duty cut, have overperformed all the other markets. But even the other markets are showing double-digit growth. And that is exactly what I'm referring to. It is not just segments, but all across and regionalities as well. Well, initially, we were watching even the upper end of the market also had huge traction. And that was about 5-6 months back, maybe just before the second wave of pandemic hit. And after the second wave of pandemic, what we are watching is that the lower end is showing more traction. So overall, if you look at if I talk about last complete year post first wave, we have seen initially a huge traction in the upper end. Even luxury, super luxury markets also showed a lot of traction. And now it is focused more on the affordable and lower end of the market. So net tractions is observed all over in all the market. Next question that you asked, the second part of your question was about pricing or discounts given by developers. Let's look at two sides to it. On one side, you have seen the construction costs shooting up, especially because of the laborers going back to their homes, etc. Waiting for them to come back did have a huge cost impact. On the other side, raw material costs have also shot up, whether it was, the finishing goods, etc. While steel was showing some sign of reduction, but the cost of cement had shot up. So overall, there was no way of passing on any further reduction. So one thing which you have to settle with is that the prices have definitely bottomed out. Here onwards, we are either looking at a flat real estate or things moving up. However, what you specifically asked about the discounts and freebies offered or doled out by the developers, that has dried up to a large extent. Well, in a few distress situations where the supplies are overstripping the demand, they're still offering it, or in a few situations where because of the pressures from the financial institutions, etc., velocity of sales has to be kept at a certain level, the discounts would still be offered, but net at a broad level, we are watching most of these discounts have been pulled out.
I'm looking at pricing actually, the pricing chart in the report, and I noticed MMR, NCR, Bengaluru maybe a little more, but most of these cities have seen absolutely flattish pricing, nothing great really to speak about. But what's exciting is Chennai, Hyderabad, 7% and 5% appreciation in just the last 6 months. What really is propelling prices over there, and do you continue to see appreciation potential in these towns rather than the Mumbai and NCR regions?
These two markets that you are specially focusing on, let's look at it this way. Historically, I would say last 4-5 years, both these markets have seen a lot of turmoil. On Chennai side, we have seen natural calamities one after the other, and on Hyderabad side, initially at least for last 5-6 years at least, the stability has come about. But then political uncertainty had actually almost brought the Hyderabad real estate to a very bottomless pit kind of situation it used to be in. But last 5 years, it has started going up. And in both these cities, the bases have been very, very low. Affordability was extremely high in both these cities. So I would say these two markets are correcting themselves. In last 5-6 years, 10 years, both these markets have seen huge erosion, both in values and number of transactions, etc. And gradually, both these markets are coming back to the elements. And that is what I would say to justify this 5 and 7% kind of a upswing in both these markets. And I would say even now, there is some potential in both these markets to look at, upswing, and it is not going to end so soon. Whereas the other markets, as you rightly observed, are flattish, and that remains, even Bengaluru is barely a couple of % or 2 kind of a movement, which is in any case, if you look at the inflation also alongside, then we are going negative. So barring these two markets, your observation is correct. The other markets are either flattish or negative. Back to you.
Okay. Understood. So that's just a wrap of essentially how pricing is moving. So, Gulam, as in, for let's say somebody who is wanting to put their money in the realty market, as in from an investor point of view, what would you recommend? Because, pricing is one thing, appreciation is one thing, but you would also be wanting to look at rental yields. So is there anything that you've observed over there? Because, last year, of course, a lot of tenants had got their, rental contracts renegotiated. Is there any semblance of improvement in yields in the last 6 months and perhaps from here on as well?
To start with, let's talk about rental yields. Rental yields don't make any case of investment. Even if you're talking about 2 to 3% kind of a rental, and then you have to also pay your property taxes and maintenance costs, etc. So net, what you take home is barely 1.5 to 2% per annum. And that's such a low return that you may not have any case to actually promote rental housing as an investment opportunity. On the other side, of course, you also, something related to that, you asked about, rent renegotiations, etc. Well, rent renegotiations happen all across, whether it was residential as an asset class or the other asset classes, commercial, retail, or so on and so forth. And that is something which is reflecting over here in residential as well. But that said, residential real estate, in any case, as I mentioned earlier, is on such a low return on rental side that it doesn't really make much of a difference, even if the rental values are corrected a bit or a few months of rental were given up because of the pandemic situation. That said, on the other side, your question, first part of your question, this question was about investment angle. Well, investment in real estate is something which at least I am not yet very convinced about. Because on one side, there are two components to any investment as far as housing real estate, rental housing investment is concerned. On one side, you have rental appreciation. On the other side, you have price appreciation where the capital values are shooting up. And net, that's the result of the two, that you then look at your annual earnings or annual returns that you would talk about, annual appreciation. Now, that is where, if you look at the, and we spoke about that to answer one of your last questions, that the price rise is either flattish or negative. And then let's also talk about inflation also playing a huge role here. So even if you have, say, for example, in the case of Hyderabad and Chennai, where 5 and 7% of escalations in 6 months you have seen, if you look at correcting it with inflation, it may not be much to talk about. And then wherever it is negative, it is absolute negative. So what we are looking at is that property price appreciation plus rental return put together also is not giving you a comfort to buy residential real estate yet. In a nutshell, what we talk about is, if you are sure that your property prices will double up, if today you're buying something for 100 rupees in next 5 years, if it is going to 200, it makes sense to talk about real estate as an investment opportunity. Otherwise, there are multiple other asset classes which you may actually look at. And hence, and especially real estate also in terms of liquidity is worst hit. You can't really sell your property today if you want to pull your monies out. And that's also a big reason for you to look at real estate with some amount of skepticism. While you're talking about, if you're looking at spreading your asset classes all over, you may still look at real estate, but at the end of it, and don't expect much, at least today. And in fact, I would say if you're an investor, don't try to get into it, because at least residential real estate is not giving you much of a comfort. To get into commercial and retail and shops, etc., may still have better returns to talk about, but at least residential is not making any sense, at least for next 4-5 years.
Well, that absolutely makes sense. Thank you so much, Gulam, for joining us today and sharing with us some of the very interesting insights of the report for all of our prospective home buyers as well. Thanks once again. And with that, we're completely out of time as well on the show, so we're going to have to wrap it up. Many thanks for watching.